everyone, you're here with Property Mythbusters. I'm Debra Beck-Mewing from Crave Property Advisory.
I'm Ken from Avvora Finance broker.
And I'm Gilmovich from Real Property Manager. Great to see you guys. So today's myth. The myth of the week for the next 10 minutes we'll be discussing the myth of will the property market be rosy now that the Liberal government has been re-elected?
Yes.
And the dust is just settling after Saturday's election, and as I understand it by a newsfeed that Liberals have majority government.
Yep, that's right. It's been announced.
Yeah, terrific. So what does that mean? What does that mean for the property markets? Well, as we have always discussed, that we don't see the market as one whole market. It's fragmented and it's doing different things in different states of Australia. And what effect policy or change of policy has, for example, we know during the 3 years that Labor was taking a stance to curb negative gearing and isolate it to one particular property class, and that's new build. And the other thing that was happening was that a reduction of the capital gains tax benefits. So pretty major taxational reform was at the centre of debate in this election day.
Yeah, and I also think that they were making people who wanted to be aspirational in taking care of their financial future, they were kind of saying that was a bad thing. So it was sort of like, we're going after all those people with...
You can see how people can get really, really caught up during the campaigns, and each one have to say this time round, as opposed to other elections, you couldn't see two political parties, the majors, more opposed to in their policies and approach to governing. But you can see how very easily they can get wrapped up into kind of almost relying on the government to solve your financial wealth problems.
Yeah, no, that was never going to work out. But anyway, so what are we seeing now that we're post the result? First of all, I was completely shocked and also completely riveted in the detail. But I think Ken will agree with me, a couple of weeks before, the last fortnight, I think we've seen people starting to get ready just simply because the election was going to be over. So either way, the market was going to have just that little bit more of certainty, maybe not confidence, but people were like getting ready. And of course, now that we've had the result, we are, I'm certainly seeing a lot more inquiries and people who are, I guess, expecting that if the market was slow before, it's going to speed up. And if we believe that that's what's going to go forward, then potentially we've seen, potentially the bottom of the market was last weekend. And I would have to say, in my experience, I saw good property was starting to be fought over again in the last couple of weeks. So it's almost like the market was sort of starting to flatten anyway.
Yes, and of course you have a look at Australiawide markets as well, so you notice this very, very closely. But definitely you can sense that there has been a bit of a hop, skip and a jump of late, even pre-election. And you can look at that in even the auction clearance rates.
That's right.
Starting to move up.
Yeah.
Heading towards 60% mark, which showing, this is our major capital cities that's showing confidence.
Yeah, that's a seller's market if you're at 60, isn't it?
But absolutely, and what we are noticing, I guess, is now this trend of the return of the home buyer.
Oh yeah, that's
Yeah,
That's the difference.
I'm certainly seeing a lot more, like well before the election, probably towards the start of this year, a lot of first home buyers, people upgrading, looking at options, whether they can hold and rent out their current property and upgrade, or whether they should sell and upgrade. There's been a lot of inquiries, and I think now with the election over, investors are now free to kind of do the plans are a little bit more clear. The fog's kind of lifted, that uncertainty, and it's just I don't know. From a credit perspective, there's a lot of inquiries coming through from what I can tell.
And there was just recently another announcement today, wasn't there, from one of the regulators, Ken?
From the regulators today? Well, I know that Avvora and Avvora have actually removed all their caps, interest only. They've also removed the 10% investment cap, and so the investment market isn't seeing any regulatory restrictions to accessing investment. But the thing is, a lot of the data and information is still being fed back to ASIC and Avvora. So although technically there isn't a, in theory, lenders can lend as many interest-only loans as they want. There isn't a cap, but they're still reporting these figures to Avvora and ASIC, who are still monitoring, what's happening in the lending market. So
Big brother and sister are still watching.
They are definitely still watching.
They're not off the hook. That's why you're saying they're not off the hook.
Because the numbers still get reported back. They're still cautious about ratios in terms of how many.
And the banks are still getting audited by Avvora, so they're not off the hook.
Yeah, and it's only 6 months since the Hayne Royal Commission guidelines came out. Anyway, that's maybe for another session. Okay. And so, thanks, Ken. What are you seeing from your perspective, John?
Look, I sense that. I guess the message today is the government's not going to save you.
No.
Okay, and you can get really wrapped up in that during these campaigns. That everybody's kind of hedging their their well-being and their retirement on government policy, and that shouldn't be the case. And it's okay to strive for independent retirement.
That's a good thing.
Where you're not relying on the government, and you're educating yourself and making educated decisions.
Yeah.
And that's crucial because, again, not all markets are the same. Not all policies are the same statewide. They can differ.
Yeah.
And
just on that point too, maybe one of the lessons from the election, something that we're sort of starting to hear, is that the voters gave the message that we really don't like change. So potentially big changes in the future will be very slow.
Absolutely, and so you shouldn't be heavily reliant on policies to move forward, or taxational benefits, or discounts, or rebates, as a springboard to getting into the market.
Yeah.
There's a lot more depth than that.
Yeah.
And of course, great advice
pays
pays dividends. You've got to be talking to the right people. So yes, I think overall confidence is coming back. It might be coming back from a different sector of the market. It's not much the investors, but the home buyers at this point. But in due course, you never know. The investor might return.
But there's still warnings, I guess. So, as you mentioned before, like the spookers, you've seen them really be active again, just over the last 48 hours. Yes.
Proceed with caution. There are still headwinds out there in the marketplace, and make sure that you're aligning yourself with the right team, I guess, and giving you the right advice with facts.
Yeah, and I think once again it's about getting advice that's right for you as an individual. So what's right for the person across the street won't be right for you. So that's where
Yeah.
you've just got to be careful.
Yes, I guess the bottom line is you have to be really, really selective with your purchase and not see the market as a broad brush, or any particular property type as a broad brush.
Yeah.
To successful investing. That will be my advice for today.
Sounds good. Okay.
Yeah, 100%. Agreed.
So you're going to
Wrap up. All right, so thanks for watching. We love your feedback. Please join the Property Mythbusters Facebook group to send us questions or myths you would like busted. You can also contact us directly through our social media channels. So certainly get in touch with us if you have any questions. Until next time,
Bye.
have a good one.